It's 9:42 on a Saturday night, and Maya's bartender is holding a pay stub beside the ice machine, asking why his paycheck didn't jump. He heard no tax on tips. Customers heard it too. Now every receipt, tip pool, and service charge feels like a tiny trust test. Here's the signal. The new federal tip deduction is not just a tax headline. For small operators, it's a payroll communication problem. IRS guidance says employees and self-employed workers may be able to deduct qualified tips received in certain qualified occupations on their 2025 federal return. Notice the timing. A deduction on a tax return is different from money automatically appearing in next Friday's direct deposit. So your first job is not to become a tax scholar. It's to explain what changes, what doesn't, and what workers should not assume. Pause, because payroll trust breaks fast. One vague poster can create 3 weeks of rumors before your accountant even returns the call. Maya's Place has voluntary tips at the table, an automatic event fee, delivery surcharges, and a tip pool split after close. The IRS says the maximum annual deduction for qualified tips is $25,000, but that cap belongs on the worker's return, not your break room promise. That means you should not tell every worker the low less. Many may benefit, but results vary by income, filing status, and records. The deduction phases out above $150,000 of modified adjusted gross income, or $300,000 for joint filers. Married taxpayers must file jointly to claim it. That's why the safest staff answer is simple. Some qualified tips may be deductible, but each person needs their own tax professional. For the business, the reset starts with language. The words tip, gratuity, service charge, fee, and surcharge cannot blur together anymore. Step 1. Audit every POS button, receipt line, invoice template, booking page, and checkout prompt where customers see money added after the price. Final IRS regulations say qualified tips must be voluntary, paid by customers, and paid in cash or cash equivalent forms like cards or mobile payments. Voluntary means the customer controls whether to pay it and how much. If they cannot change it, do not casually call it a tip. Maya found the problem on her banquet receipts. The automatic charge was labeled gratuity, even though guests had no real choice. The IRS says mandatory service charges generally are not qualified tips when customers have no option to disregard or modify the charge. If you use automatic charges, label them plainly and route them correctly. Ask payroll and counsel how those amounts should hit wages and reports. Create 2 POS buckets, customer-controlled tips and business-imposed charges. Then make sure exports show those buckets separately by employee and shift. A service charge can still support wages or operations. It just may not qualify for the tip deduction if the customer had no choice. Size. And don't fix this by renaming every fee a tip. That can create wage, tax, and trust problems you did not need. The final regulations list more than 70 tipped occupations across 8 categories, including food service, hospitality, personal services, home services, transportation, and delivery. So this is not only a server issue. Think bartenders, stylists, bell staff, massage therapists, movers, drivers, guides, valets, and solo operators. Make a roster of roles where workers customarily receive tips. Then compare it with payroll codes before year-end forms are produced. Workers can claim the deduction only for qualified tips included on W-2, 1099 Nescentence, 1099 Mescentence, 1099K, or reported on 44137. Ask your payroll provider one direct question. Where will qualified tips, service charges, pooled tips, and allocated tips appear on worker forms? For a self-employed stylist renting a chair, the issue is different. There may be no employer cleaning up the records later. If you're solo, consider saving daily tip records, platform deposits, and customer payment summaries. Good records may help you prepare separate qualified amounts. The IRS includes cash tips, charge tips, gift card payments, certain tokens, electronic settlement, and mobile app payments denominated in cash equivalents. At close, export tips by employee, tender type, and shift. Do not rely on memory when tax forms depend on the trail. Tip pools add one more layer. Shared tips can still be qualified, but only if you track who received what, not just the group total. Before changing the pool, map the current flow, who contributes, who receives, when it's calculated, and whether managers are involved. Write the rule in plain English. Then have Payroll, your accountant or employment counsel review it before you announce anything. Maya's turning point came when she stopped arguing definitions and started building a staff script everyone could use on a busy shift. Keep the huddle short. 20 minutes before service beats a 40-minute lecture after everyone is tired and counting cash. Try the staff line. The federal rule may let some workers deduct qualified tips on their return, but payroll still has reporting duties. For customers, keep it even simpler. Voluntary tips go to the service team under our policy. Automatic charges are separate business charges. Employees will ask about withholding. Do not wing this. Tell them payroll will keep reporting required amounts unless your provider changes instructions. Then add, talk with a tax preparer about your own return. That protects the worker, and it protects you from promising outcomes. IRS guidance points workers toward using the correct forms and records because the deduction depends on reported qualified tips, not hallway rumors. Update onboarding with one page: what counts, what doesn't, where it appears, and who to ask about personal tax questions. Make the page boring on purpose. Clear beats clever when someone is trying to understand rent money, childcare, and April taxes. Delivery businesses have another trap. A delivery fee, fuel surcharge, or platform charge may look tip-like to customers but function differently. On apps and invoices, consider separating driver tips from delivery fees. If customers choose the amount, preserve that choice in your records. Run a checkout test yourself. Order like a customer, book like a client, and note every place the language could confuse someone. Salons and spas face the same line. An optional tip after a haircut is different from a required wellness fee added at checkout. If that fee is mandatory, call it what it is. Workers may still be paid from it, but the tax treatment can differ. Train front desk staff to answer without improvising. Optional tips are customer controlled. Required fees are business charges. Personal tax results vary. Home service companies get messy too. A plumber's invoice might include a trip charge, parts, labor, and a thank you tip field. Separate the tip field from the trip charge. That small layout choice may prevent a worker from expecting the wrong year-end number. Before the next job, classify every add-on charge, optional customer amount, required business fee, reimbursed expense, or taxable wage component. And remember, federal income tax is not the whole payroll universe. State rules, wage laws, FICA, and tip credit rules can still matter. Softly, if this touches minimum wage or tip credit, consult a payroll professional before changing pay practices. The deduction does not erase labor rules. The One Big Beautiful Bill provisions created the federal TIC deduction framework for 2025, with IRS guidance continuing through proposed and final rules. Put a review on the calendar before year-end processing, POS labels, payroll codes, tip pool rules, contractor forms, and staff scripts. The goal is not perfection. The goal is that no employee learns the truth from a rumor, a social clip, or a surprise tax bill. Please do not say all tips are tax-free. Say qualified tips may be deductible, and the worker's return determines the actual result. Use this sentence in writing. Our business will keep reporting tips as required while helping workers identify qualified tip records accurately. Maya also prepared for the hard question. If tips are deductible later, why withhold anything now? That's where owners need humility. A good answer is, we are not your tax advisor, and we are following payroll rules until our provider gives updated procedures. Create an internal FAQ with 3 columns: employee question, approved answer, and who handles follow-up. Keep managers out of tax guessing. By Monday, Maya's team was not tax experts, but they knew which button to press, which phrase to use, and when to escalate. That's the win for a small business: fewer surprises, cleaner records, and employees who feel you respected the money they earned. Customer-facing message: tipping remains voluntary, service charges are disclosed separately, and our team can explain the difference without debating personal taxes. Zoom out, and this is the bigger small business lesson. Tax changes do not implement themselves. Operations implement them, one field at a time. If this episode helps you protect payroll trust, give small business signals a follow. We're here for practical moves, not noise. Treasury and the IRS issued final regulations listing tipped occupations and defining qualified tips, including the distinction between voluntary tips and service charges. Before the next payroll run, choose one action: audit labels, call payroll, rewrite the staff script, or separate service charges from tips. This content is for educational and informational purposes only and does not constitute financial advice. Always consult with a qualified financial advisor or business consultant before making significant financial decisions. Maya never put up the poster. She fixed the button, rewrote the script, and told her team the truth before rumors did. That is a tip line reset, not a slogan. A payroll process, a customer explanation, and a record trail your people can trust. Because when the law changes, the strongest small businesses do not just react, they translate it into clear work before the next shift starts. Remember, this content is for informational purposes only and is not financial advice.